Hi and welcome to the weekly market update. It is Tuesday the 17th of September 2013. Okay, so for markets this week, the main sort of news that we saw out over the weekend was obviously the withdrawal of Summers as a candidate for the federal election. He decided to withdraw apparently due to some senators saying that they would oppose him to become Fed chairman if Obama was to choose him. Then the vote obviously goes to the Senate, so building up sort of anti-Summers support, I guess. So this leaves Yellen as the favourite to be the next Fed chairman. However, there's still talk of a few other candidates, Cohn and Geithner. So we'll wait and see. There's no set names. It's all guessing at the moment, but it looks like it's largely expected to be Yellen. The effect that we sort of saw was quite a large bid to the markets on Monday morning. We saw, particularly in fixed income, the markets gap higher Monday. This is in the anticipation of Yellen being a very dovish candidate. So if she got into power, we could possibly see ultimately a slowing of tapering, which is what sort of caused the moves that we saw yesterday morning. Otherwise, over the weekend, in terms of news, we saw the Bavarian election in Germany. We're going to start to see we've got Merkel campaigning throughout this week, and we see the elections conclude on Sunday. What we saw at the weekend was her sister party, the CSU, gain the majority in Bavaria, which was good for Merkel and the coalition that she's sort of hoping to maintain and go forward with. However, we did see the Free Democratic Party, which is part of her coalition, actually not doing so well in the election and not gaining that 5% benchmark in order to guarantee a spot in government. So this is sort of a little bit worrying for Merkel, and the main focus of this election, while it's largely expected that Merkel will remain the leader of Germany and in control, it's how the coalition will be formed and how the majorities in governments might work and which parties may team up with the others to form these coalitions. That's what we really need to watch out for and keep an eye on. Okay, so otherwise, in terms of data yesterday, it was very light. Main bit of data that we saw that was of significance was Empire Manufacturing from the US, and this actually surprised to the downside, coming in weaker than expected. In terms of data that we've seen this morning, we've seen EU car registration data, that coming in better than last, but still negative at negative 4.9. What actually surprised us with this data, though, is actually when we look at how the figures are sort of made up, the better data was actually due to UK car registrations. They came in stronger at 10.9%, and this actually dragged the European data up. So probably without the UK data, it would have been down 7.9, but we saw it down 4.9 reading due to the strength that we saw from the UK. Otherwise, this morning from Europe, we've seen the ZEW surveys, or the ZEW surveys, and these actually coming in much stronger than expected. From Germany, and also for the Eurozone, it's sort of current expectation. It's a sentiment survey, but coming in much stronger there, which is positive. Otherwise, we've seen from the UK a lot of inflation data, so the CPI, PPI and RPI. CPI tending to be the focus, and seeing those numbers. Seeing some of the numbers come in slightly softer, but the core CPI came in at 2%. So in terms of where that sort of leaves us trading, stocks-wise, we've got the FTSE trading around 66.03, and the main story here has obviously been the Lloyds banking group. We've seen the government selling off 6% of their shares that they have, in total around £3.3 billion, which is averaging about 70 pence a share. We've actually seen some weakness in the banks off the back of this morning over the announcement of the privatisation. In terms of US stocks, we've got the Dow future trading at 15,419. And then if we look at currencies, we've seen some weakness in the dollar over this last week, again in anticipation of this tapering. Now talk with the chairman and obviously with Yellen coming to the forefront. But in terms of euro dollar, we've seen one spot 33.63, and then for cable, one spot 58.94. It's getting stronger there for the pound as well. In terms of commodities, we've got the gold future around 13.18, and then for Brent, the future is 109.53. Okay, so for the rest of the day, not too much. It's just US data left. We've got the CPI for the US, expected to come in at 0.2%, same as last, and then we've got tick flow data for the US. And tomorrow, which is where all our key data is going to lie, it's going to come out tomorrow. Starts off with we've got the Bank of England minutes out in the morning. These are going to be largely watched for the support that we see for all this forward guidance for the rates and for the asset purchases in the UK. So people really will be looking to see the vote that we get from them. Then from Europe, we've not too much data really out at all, just construction output there, and then the data is the US in the afternoon with mortgage applications, also some housing starts, building permits data, looking for some strength in the numbers there. But obviously the main focus is going to be, and what we're sort of finding with the markets early this week, is sort of a wait and see until the Fed meeting that we've got concluding on Wednesday or tomorrow evening. We are obviously largely expecting them to announce a slight tapering. I think consensus is for around the 10 to 15 billion mark, made up of sort of it differs with the expectations of what we've got from mortgage-backed securities and treasuries. So, but people are going to be waiting to see exactly what Bernanke is going to do, Bernanke and the Fed, and how much they will taper. So, probably see quite a quiet markets until that point, and quite low volumes, people just waiting there. Into Thursday, we've got UK retail sales in the morning, expecting those weaker month over month but stronger year over year. We've also got CBI trends and also sales. For Europe, again, not too much data this week, and Thursday just brings sort of Irish GDP for Q2. And then in the afternoon, we've obviously got the whole raft of US data that we get. We get initial jobless claims and continuing claims. Saw initial jobless actually come in much lower last week, so some really good data there. However, the expectation for this week is it to go back to around that 330,000 level. We also get current account data, and then we get the Philadelphia Fed index for the US, expecting that at 10.5 from 9.5, so some better data there. We get existing home sales and the leading index, so some further housing data for the US. Finally, until Friday, for the UK, we've got public sector net borrowing data in the morning. Again, not a lot really from, not a lot from the US rather on Friday, but the Europe has Dutch house price index, Italian industrial orders and sales, and then we've got the LTRO repayment, which we get every Friday at 11. We saw a bigger number last week for the LTRO repayment. After we'd seen some small numbers in the millions, we're back up a little bit last week, so interesting to see how we continue to come out. There's a lot of talk of European credit situation at the moment, and then in the afternoon we get Eurozone consumer confidence, expecting that to slightly improve but still minus numbers. In terms of supply that we're seeing this week, there is quite a lot of supply, which is mainly out on Thursday. On Thursday we get French, UK and Spanish supply, but on Wednesday, it's worth noting, we've got the German Schatz auction as well. So I think the focus is for this week. We've obviously got the Bank of England minutes on Wednesday, where we will look out for how the votes and support is split across the Bank of England for the forward guidance and the rates. Then the Fed in the evening, which is obviously the event of the week with Bernanke, with his press conference following the decision, and we'll see if they will taper or won't they. And then the week will conclude with the German elections on Sunday, and we should get those results Sunday evening and into early Monday. Okay, so that's it for this week. As usual, any feedback much appreciated. Thanks.